What's up, guys? My name is Andre, and in this video, we're going to be covering the initial bounce breakout by performance report. So here we're looking at YM. We're obviously looking at the IB report. We're looking at the by performance sub-report. We're looking in the last 6 months in the New York session. Now, this report has a ton of customizations, so please make sure to watch the entire video. It is extremely important that you understand what's being measured here, especially when you start to play with the customizations. So what I want to do here is show you a few examples. And what this report measures is only the first break outside of the initial bounce. It is measuring the performance outside of the first break. So in this case, there was a break to the downside right here. And then once price breaks back in, this whole piece is not going to be measured. So I want to make that very clear. It is only measuring the first break. Now I need to go over a couple of examples here because the customizations are going to determine if you're going to capture this break or this break. So if we're going to start with the by wick customizations here, so you can see we're using let's open up the customizations. We're using a 5-minute candle time frame. So that's relating to the 5-minute chart that I'm looking at here. And then if we scroll down, you can see the breakout criteria, which means when price initially breaks out of the IB, and then you have a break back in criteria, which is going to end the calculation. So let's look at this using the by wick on Monday, March 3rd. So you can see, let's go to Monday, March 3rd. Monday, March 3rd. Now, if we use the by wick right here, the by wick customization, the first break performance is minus 0.08%. So let's zoom in here for a second. Let's zoom in. And what I'm going to do is I'm going to go from the IB low and measure the performance of the first wick that breaks out of the IB, which is this right here. And you can see that price broke back in the following candle, and that ends the calculation. So here, the by wick is very, very sensitive. In this case, you can see it wicked out, wicked back in. That is the first break. If you're looking by a wick, that is the first break, and that's the calculation. So you can see this is what exactly is being measured. Now, if you were to change this to be the by close, so let's change these to be a candle has to close outside specifically a 5-minute candle has to close outside of the IB. Let's click save. And now for Monday, March 3rd, the performance is going to be different, obviously, because this break is completely ignored. Now we need to wait for a 5-minute candle to close, which is this one right here. And then now this is where we start the calculation from the IB low. And then now we look for a candle to break back in. This is the candle that broke back in. And now what we're doing, let me make this a little bit bigger. Now what we're doing is we're measuring from the IB low down to the low made between these two candles. So what I'm doing is I'm going from the start candle to the end candle, and I'm going down to measure that performance. You can see right here is the low between the start and the end, minus 0.32%. That falls in line here. So again, this is the first break. In this case, we're looking at the candle close, so we need to look for the first candle to close. Then we need to look at the first candle that closes back in, and we're checking the low between these 2 points. But the way to use this, and we also have the indicator for this, so let's go to the last 6 months here, is you can see the average. This is where you're going to want to look for the average off to the right, and then this is the max. So this is the single biggest move, and then this is the one that you're going to want to look at for the average. This is the one that you're going to want to look at every day. And what you can see here is that the average move down is minus 0.23% on the first break when you're looking at candle close on a 5-minute time frame. So if you go to this indicator setting here, you can actually go to this extension piece and turn on the extension, and then you see it's minus 0.23%. So what I'm going to do is do 0.23% right here. And what you can see is that automatically plotted for me is my target right here from the orb low. So it automatically calculates it for you. You can turn this on for the high, the extension from the orb high as well. You can make it whatever you want. So I'll even make it 1% just to show you how this works, and watch this update. Now you can see obviously this is a much bigger move. So in this case, from the IB high to the top of the indicator is 1%. So this indicator is actually going to help you automatically plot your targets for you. And what you'd have to do is just put in line whatever you see here for whatever ticker you're looking at. Obviously, these are going to change. This is going to change by ticker. And you just need to remember that this is only on the first break. So if price breaks back in and now you're looking for a move. So let's do this. If price does this and then breaks back in, all this is not considered here. It's really, really important that you understand that you cannot use this 0.23% as a target on the second breakdown. If you want to know the targets on the second breaks, you want to go to the buy levels report right here, the buy level sub report, and then scroll down and make sure to watch that video. It's extremely important that you watch that video. So let's look at this just in terms of a different session quickly, just so I can show you guys if you're a London trader. And by the way, this applies to stocks, Forex, crypto, and futures, so it doesn't matter what you trade. The only thing is that with stocks, you're not going to have the sessions. With everything else, you will have the sessions. So let's look at the London session quickly. And what you'll notice is that you're going to have to change your indicators here. So double click on the market sessions. And by the way, if you want access to these indicators, on the right side of the screen here, you're going to see TradingView access. You're going to put your TradingView username in this box. The way you find your TradingView username is up here on the top left, right here. Mine is Edgeful, yours will be something else. And then once you put that in here in your indicators section, you'll see this invite only come up, and then all the indicators are going to be here. The market sessions is the one that I'm using to outline the sessions. And obviously the IB is the one that I'm using to plot my initial balance. So now if you double click on that, you're going to see I could turn on my London session, turn off New York. Now you can see how it's plotted there. And now I need to change, this is really important, I need to change my initial balance time frame from 3 to 4 a.m. Now my extension and everything else is going to shift. Everything has shifted to be that first hour of the session here. But you can see that obviously the average performance has changed to 0.14. So what I want to do here is change this to 0.14. And now in this case on this day, it didn't get there, but a candle didn't close. This is so important. A candle did not close down here. So this is not the break that you're looking for. You need to wait for a 5-minute candle to close outside of this range. So in this case, it's this one right here. So this performance is going to be, let's actually look at this together, because this is going to, this actually does happen a pretty decent amount. So we're looking at March 3rd. We are looking at March 3rd here in the London session. And now we're looking 5-minute time frame, candle close, 0.28%. So in this case, what we're looking at is going to be this move. Actually, this is interesting. So this is really important. This candle closed up here. So this is actually a very unique situation. I'm happy I caught it right now. There was a gap up here on this specific candle. So the candle did not close outside of the range. The candle opened outside of the range, and we're looking for a candle close. So this is a very unique situation where you're ignoring this candle because it did not close outside of that range. There was a very minor gap up on this 5-minute time frame. And now again, I don't have on my personal trading view, I don't pay for the YM data. So that's an important piece. You need to make sure that you get the data directly from the exchange. You can pay for it on TradingView. It is a separate subscription, or you can pay for it. I'm sure you get it through whatever your broker is. The first break though, so I'm really happy that I found that. The first break here is from this candle close right over here. And then now there's a candle that closed outside. Now I'm scanning. I can see here, candle closed back in. So what am I doing? From the IB high to the high made between these two candles is 0.28%. So pretty much Now what you want to be doing is now you can mark out your extension levels. Now let's go back to the 6 months. Is 0.14, so you can mark out your extension levels. And this is an area where you can look to trim. Did I do that correctly? This is an area where you can look to trim. So right here, point right there. Let me do that. There it is. Okay. So in this case, you would have caught in today half the move. The move was double what it is. This is a great area to take runners off. This is a great area to start to trim your profits, lock in a green trade, because this is the average move. Now, some days will be more, some days will be less. It's obviously part of what an average is. Some days are more, some days are less. So you can trim along the way. You can leave maybe 10% of your position to just run for the rest of the day, but you need to know that this is the first break only to the upside or to the downside. So if you're looking for continuation on a move back out of the IB, you cannot use this report. You have to use the buy levels. So yeah, this was actually a great find here. This example right here, where it closed inside. You need to make sure that you are looking at the right thing. To be honest, I would personally recommend that you use the candle close, just because it's more of a solid structure and a solid measure. But obviously you guys can do whatever you want. It doesn't matter what I say. And if you have any questions about this, make sure to reach out to our support here. If this was helpful, please subscribe to the YouTube. Much appreciate it. Have a good one. Thanks for watching.